Welcome back, ladies and gentlemen. My guest today, he is a real estate investor. He is the founder of Summers Capital. They own over $60 million in real estate, and he is also the host of the Rich Summers Report from San Diego, California. It's Rich Summers. How you doing today, man?
Michael, I'm doing wonderful, man. I appreciate you having me on the show, and it's good to be out here in Vegas. We just hit 3 cities in literally less than 48 hours. We were in Utah yesterday, Salt Lake City, and then we were in Houston this morning, did a podcast out there, and now we're here in Vegas, man.
Houston this morning. There you go, man. Nice. One thing I was really interested in, I am a KC 135 instructor navigator, and so ATC calls are something I'm extremely familiar with. You were an ATC controller for 7 years?
11 years.
11 years, 11 years. So tell me about that.
Dude, so, I grew up like most people. I was raised from a young age to go to school, get good grades, go to college, get a job. And for the most part, that's kind of what I did. Stumbled into a job as an air traffic controller with the government and did that for a while, loved it. But along the way, I just woke up and I said, you know what? I want to get into real estate investing. I want to start my own businesses. And I cashed out my 401k. Where a lot of people say it's a little bit too risky to do that, but I cashed it out. I used that to buy my first apartment building. Shortly after that, I learned how to raise some private capital and punched out of there after 11 years. And now I'm full-time in real estate, man, and loving it. It's been a fun journey.
Beautiful. So I was like I said, I was a tanker navigator in a KC 135. And when I got out, I got into finance. I started trading. I work as a quant for a small fund. And I felt like it was a similar skill set because what happened was you get into a situation where I just have to make a decision, and you get good at making these decisions over and over again. I'm wondering, do you see any correlation? Obviously, air traffic control is a high stress. You said before it wasn't stressful for you at the time. You look back on it out and like how serious your job was. Do you think that has anything to do with your ability to pull the trigger to buy the property because of the fact that you had a serious job like that previously?
Absolutely. It correlates to not just real estate investing business. It applies to dating as well. Just learning how to be decisive, but also more importantly, like learning how to turn it on and focus when you need to. You know what I mean? So there's a lot of instances in life where it's like, hey, sometimes you got to turn it on. Most of the time you don't have to, but you got to know when you got to turn it on, and it definitely applies. And dude, it's crazy how many things translate from business to real estate to ATC, all that stuff, It
is interesting. My favorite ATC story is I'm flying over Fallujah in Iraq, and ATC comes on and they're like, Tanker 21, come heading 290 or 270. They wanted us to fly west, and they're like, please expedite. And I was like, expedite? What the fuck are they talking about? Like I'm in Iraq. Like, what does it matter? So we turn left and we get home, and they tell us that some F-14 or some shit had come out of Iran, but it was a mistake. It was an Emirati aircraft that didn't have their IFF turned on, and they come out of there, and we're thinking we're about to go to war. And it was like, I was yelling at them like, you need to tell me immediately when some other aircraft is coming after us. It was really funny, man.
That's funny. What was your role in the KC 135?
I was a navigator.
Okay.
I was a navigator. Yeah, I also, we had this thing called Tanker Common, and ATC could hear us do this. And I would get on there. I used to be a DJ at a strip club, and I'd be like, cinnamon up next, cinnamon, and they didn't know who it was. And I would do this all the time, like on the Tanker Common. I would be like, who's the dude with the strip club?
That's
the strip club voice. Well, there you go. Sorry, Colonel, you figured it out. So just going back to this before, your mother, the only person I've ever met, this unique combination. Your mother's from Taiwan. Your father's Dutch. Your father's from Holland.
Yeah, my dad grew up in Holland.
Okay.
He met my mom. My dad was actually in the Air Force.
Okay.
And he flew the KC-10, actually.
KC-10, yeah. So that is a DC-10 with about 200,000 pounds of fuel. They basically take the cargo compartment out, and they put these big rubber fuel bladders in there.
Yeah.
Yeah.
So he met my mom during the Vietnam War.
Okay.
He was stationed out there in Taiwan for a while. And he met her at a nightclub in Taipei, and they hit it off. And this is before cell phones, of course. So they're writing letters, and she ended up moving out here. And they got married, and they've been together for like 45, 50 years now.
Amazing.
Yeah,
amazing.
it's crazy.
Wow. Okay. Nice. Very cool. Yeah. I mean, KC-10 is a big monster. That's a big old aircraft right there. Very nice. So now we do this. Can you talk about this? Because I thought it was really interesting. Because I've heard 100. You guys can check it out. The 100 interviews you've done talking about real estate. But one thing I thought that was really interesting was when you talk about intention. So there were two instances of it. The first one, which I thought was great, was you going on a date with a girl saying, "Hey, let's go see the Padres." And twice you told this girl she can, you got her an Uber to leave. A lot of dudes will not do that. I know dudes, like real talk. I know dudes who just, like they won't even like a girl and just go through and have sex with her anyway. You just told the girl, you just knew you weren't feeling her at all. And then you just, even though you had planned to go to the Padres game, you told her to leave, and you were very directive about it. Can you talk about that?
Yeah, I'm very direct. And as I get older, I think it's more and more important to be direct because, as a high value man, you got to be selective with your time, right?
Yeah.
And I also want to respect a woman's time as well. And so, I always set up these dates. I'm a season ticket holder of the Padres. So one of my favorite dates is, hey, let's go to the game. Let's meet beforehand for like a little pregame drink. I'll feel it out. If I'm feeling the vibe, I'll go through with it. And then after the game, if I'm feeling it, I'll take her to sushi, and then we'll keep progressing the night.
Yeah.
I like to move the girls around per se. Well,
Yes.
a lot of guys don't do this, but instead of sitting at one spot for 5 hours and having 6 drinks, I will literally move them from place to place. And in those same 5 hours, we will go to 4 to 5 spots. And by the end of the night, the girl feels like she went on 5 different dates with me, and it feels a whole different level of comfort. And then in between each spot, it's like, hey, we're taking a ride together. I'm holding her hand, getting her out of the car. By the end of the night, she feels very comfortable. But to your point, if I'm not feeling it, it's happened a couple times now where show up. This is usually if I meet a girl online. I don't prefer the online thing for obvious reasons. I don't do it a whole lot anymore. But if I'm not aligned and I'm like, hey, physically they're not what the photos were, I'm a little bit let down physically, or I'm just not feeling the vibe.
How bad has it been? Has you ever had one that just completely didn't look like their photos at all?
Not too crazy, because I always verify on Instagram.
Bro, my brother, one time I took him to a club because I know all the people in nightclubs in Dallas, and I'll get us into VIP, and I'm like, and he'll have like a Tinder date, and he'll bring them up because it's like we're in a nightclub at a VIP, and he can just ditch if she doesn't look like it. This one girl came up, and I told my girlfriend, I was like, that's the girl from Tinder, and my girlfriend looks at her and goes, no, she's not. I was like, that's the girl from Tinder. We just saw the picture. I'm like, that's not her. I was like, that's her. I'm telling you, that's her. We looked at the picture like, damn, bro, it is like 180 degrees difference. And what makes it even crazier is Facetune and FaceApp. You can get it for like $5 a month. I do this with my clients sometimes. They'll take pictures with girls and they'll be like, she's not attractive. And I'll just go boop, 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 like right on the call in 30 seconds. And then she's like a fucking playmate. Like it's crazy what you can do right now.
Dude,
anyway,
so scary.
the catfishing thing is just very fascinating to me. Anyway, go ahead.
So, I always will look at the social media, and then it's like, if none of the posts are recent, you can tell I'm like, that's a big red flag.
Yeah.
So anyway, so I'll meet him, and there's been a couple instances where, hey, I'm just not feeling it. And here's the thing: if I'm not into it right off the bat, I'm not going to be the best version of myself. But also, I'm going to go to the game. I know everyone in San Diego. I'm going to run into people I know. I'm like, dude, I don't want to be seen with some girl that I'm not into, and it's not a girl that's aligned with my intentions are. And so, if I'm not feeling it, I will just cut it. I'll have a couple drinks, and I don't do it in the restaurant. I'll just say, hey, I'll close out, and on the way out to go to the game, I'll walk her outside and I'll say, hey, I had a great time. I appreciate you coming, but I don't feel like we should go to the game.
Yeah.
What are the chances I could call you a ride home? And I'll call her Uber home. I'll put her in the car. I'll say, hey, thank you so much. I appreciate you. And that's it.
I actually could see that working additionally. Like when you said that the first couple times, you said you've done this twice, and you said you were cool with the girls afterwards too, right? One of them introduced you to and then in both cases you ended up calling a different girl, which again, I highly recommend, guys. Like always, there should never be a situation where if a girl stands you up, you don't have anything else to do. That's what I love about Vegas.
And have girlfriends.
Bro,
it's okay to have a bunch of girlfriends.
The millisecond, if a girl would just stand me up, I'm on stage at XS and just so full of not giving a fuck, I just can't even express it. And you know what I do that's really petty? I'll post all the fucking videos like, oh, is that me just right behind Diplo? What am I doing? Just petty ass videos like, hey, this is a good thing you stood me up. No, but it's like one of these things where it's like you should always have another option. Like I know some dudes, and I definitely had the point in my life where I did this, where I would double book every day when I go out. I literally have 2 dates lined up. I'd have an 8 p.m. date and 11 p.m. date. All the time I would do that. Because girls, like again, like especially when you go up the physical attractiveness ladder, you start to get to a point where it's like, and this is just generally what I say, is if she feels like she's the best you can do, then she's going to just be more likely to flake. If she feels like it's a situation where he can definitely do better than me, then she's not going to. And so like you're constantly having to show that. And your situation, obviously, doing really successful with real estate, the boutique hotel thing that you're doing. But yeah, man, I always thought that was really important. And so listening to you do that, I just know so many guys who would never do that.
Yeah.
And they should. I thought that was just really great. Your intention also when it talks about, I go back home sometimes to Texas, and I'll have maybe some family members or some friends, and it's very clear that they have a very scarcity mentality, right? They just assume I'm unhappy because I'm living out here in Vegas. They assume all these things like, when are you going to settle down? When are you going to do this and that? And it's very interesting when you talk about having to cut people out of your life. You said you had business partners that you don't work with anymore. What is the inclination for you when hey, maybe I need to move on from this relationship?
It's, now you're talking about females or for business
No,
partners?
just business partners. Yeah.
Yeah. So the partners, that's really thinking about your potential and your future, because you will only grow to the level of your constraints, not your potential, right? And so if you have partners in business that are not going to allow you to reach your full potential, it's okay to cut it.
Yeah.
Not all partnerships are going to be aligned. And maybe you are aligned this year, but next year you might not be. And so, I went through a point where I had to phase out a couple partners that I was working with. It's just the level of risk tolerance that they had versus what I had was different.
Yeah.
Right. And so, in business, you got to be comfortable taking a little risk. Sometimes you got to be able to grab your balls and go for it. Right. But in this situation, they didn't want to do that. And so I never felt like I was going to reach my full potential.
Yeah.
I was not going to be able to buy the deals that I wanted to do. I was not going to be able to go out there and raise the money that I needed to do to keep growing under that circumstance. So it was a very tough decision. And we had a successful partnership. We bought a lot of real estate together. We still own 3 deals together. And I have nothing but good things to say about those dudes. It's just we were not aligned. And you know what? Quite frankly, looking back, those dudes are in a better situation without me. And I'm in a better situation without them.
Yeah. What's that conversation like? So I know a lot again, this is often with my clients where they'll have because one of the things we teach is extreme ownership. There's Crucial Conversations, another great book I recommend, to not ever be passive aggressive. So in this situation, you have a direct conversation that you need to have with somebody that might be an uncomfortable conversation, because when you say, hey, we need to break up this partnership, what you're saying essentially, or what they may read into the subtext is, I have figured out a way that I think is right, and what you're doing I don't think is right, so we need to split up. How do you have that conversation with a business partner like this?
Yeah, so first of all, the meetings became just like simple decisions turned into 3-4 hour meetings.
Yeah.
And it's like, dude, you can't grow if you're spending 4 hours on a decision.
Okay, do you see why I'm asking about the ATC thing? Because the ATC controller, you got to make those quick decisions.
Yep.
And so it seems like they weren't able to do it, but you were.
Ironically, they were both ATC.
They're both ATC control. How about that?
That's how we all met and got into
yeah.
it. And the real estate together got us all 3 of us out of the ATC job.
Yeah.
Ironically. But there's a certain level of risk tolerance. There was a disconnect there. And the meetings became 3-4 hours to make a decision. And so I just told him, after a lot of thought, because this is not a decision that you go and you're not going to go talk to other people about it, right? You kind of keep those kind of things to yourself. And so, I told him, I said, hey, let's sit down, let's have a meeting. I already made the decision. We went in this meeting. It was quick. It was 30 minutes. And I just told him, I said, hey, guys, I decided that I'm going to go on my own. But there's nothing to hang our hats about. This is a successful partnership, and there's nothing to hang our hats on, and it was fine. And we just, from there, I said, I don't want to spend time talking about the past. I'm like, let's spend the rest of this meeting figuring out who's going to take what. We had a meetup together. We had a podcast together. I said, you guys take the podcast. I'm going to start my own podcast, right? And that was one of the things. Like, I wanted to get a studio. I wanted to invest in the podcast. They didn't want to do that. And I let them, basically keep the podcast. I kept the meetup, and we just did a clean break.
Yeah, that's the way you got to do it. The reason why, I, like you named yours after yourself, Joe Rogan's after himself, I named mine after myself, because you know what happened for me? I watched that Call Her Daddy thing. You know what I'm talking about?
No, what is that?
They were the #1 podcast in the world. They beat Joe Rogan. It was a couple years ago. These 2 girls, and they were just telling these fucking vile-ass stories. And they would give men and women advice, but it was like super toxic advice, like how to spy on your ex or how to get away with cheating. The show went to #1, like out of everywhere. Then they had a discussion about payment, and one of the girls, she was doing all the work, and the other girl was like just sitting there talking. And when they split up, like she was like, hey, I'm going to take more of the merchandising than you are. They split up, and it was a horrible legal battle that they finally got into. And I was like, that's never going to happen to me. Nobody's taking the Michael Sartain podcast from me.
Right.
You know what I'm saying? So that's why, and who I originally got that from was Ty Lopez. I was like, Ty Lopez is at tylopez.com. You know who you can't fire from tylopez.com?
That's true.
Ty Lopez. So that's the reason why I did that.
Well, and another thing is people, they don't want to follow like a company name, or they want to follow a brand. They want to follow a personality, And so if you have your brand or your name on it, it's a lot more buildable, I think. Yeah.
Okay. Now you brought up some great points, and this is something that is very, very important here in Las Vegas. For a lot of people don't know, the Airbnb wave swept all over the country when this thing first happened. Here in Las Vegas, we have a couple of weird things about this place. When I go to Dallas, I can go to mansion parties. I frequently go to mansion parties in Los Angeles. In Las Vegas, we don't have as many mansion parties because we have the Strip. So a lot of the HOAs here are kind of strict when it comes to having a party in different places. This is something I found when my friends go on Gigster or Airbnb, if they want to throw a photo shoot or a mansion party or whatever. There's a couple of exceptions, like one on Tamayasu, and there's the Dragon Ridge party house. But like other than that, most of the people can't really throw events at some of these places. And what you talked about was this idea, if I get a boutique hotel, circumvent that whole thing. Not to mention that Airbnb is illegal in certain areas in Clark County, or maybe the whole of Clark County. I don't know how it works anymore. I know certain areas near the Strip, you can't even have an Airbnb around here. And I know some people are doing it illegally. I know I live at Panorama Towers. I know people are Airbnb in there, but I know it's against the HOA terms. So you figured out a way to get around it, and I think it was genius. And can you talk about that?
Yeah, so as we just saw in New York City, they just banned Airbnbs entirely, basically a couple weeks ago.
I didn't know that.
Yeah, and so there's been this big boom over the last 6-7 years of Airbnbs, investors going into all these markets, and they're making a lot of money driving home prices up. But a lot of these markets around the country are starting to regulate, and as they continue to regulate Airbnb, it's bringing more demand back to the boutique hotels.
Yeah.
And so, traditional real estate investing, you want to go into these red states where you have, friendly landlord-tenant laws.
Yeah.
But frankly, for us, we're going into these blue states because the blue states have more bureaucracy, more red tape, and those are the areas that are regulating the short-term rentals. And so we're figuring out a way to go into those markets and pick up these boutique hotels from mom-and-pop sellers. Between now and the next 7 years, all these boomers are going to be retiring. And so they own a lot of these boutique hotels, 10 million and under. They haven't been renovated in decades. They're not utilizing any marketing. They're not utilizing any social media. And so it's a huge opportunity for us to go in and pick up these deals at a discount and then renovate them, add a lot of value, and then implement a lot of different marketing, social media platforms, and just driving revenue.
And what makes this great, what I really enjoyed about this is now I have a private business. I can throw a party there if I want to, all night long, and there's no HOA that can say anything to you about anything. Because you decided to buy a house next to a hotel. That's on you.
That's on you.
Yeah.
It's the same person that bought a house next to the airport and is complaining about the noise.
Yeah.
So, these properties we're buying are zone commercial hotel. So,
genius.
We got neighbors that are mad, you can tell them to fuck off.
Okay, so now here's the thing. A boutique hotel under 10 million, you're talking about that when you buy the asset. How many rooms is that? Like 4, 10? Like how many can you get?
It depends. The last one we bought was in downtown San Diego. It's 24 rooms.
24 rooms.
And that one we bought for 5.8. It will be worth 11, 12 when we're done.
You know about that one over north on Industrial? I forgot what that one is. You know the boutique hotel? I'll tell you because I know they've at least sold it once, but we used to throw sick ass parties there. Yeah, it was crazy, man. And you could rent the whole place out for like $5,000. The whole, like every room in there, but it wasn't 24 rooms. There's a couple of those that are like that here. And then they would have a nightclub there at night. And you could just do whatever. But it's Vegas, so it's a little different. Yeah. Vegas is very pro nightclub and kind of anti mansion party, whereas LA, the nightlife scene in LA is garbage. And but the nightclub or the mansion scene, the mansion parties in LA are the best I've ever been to. Even better than Miami. Miami has the better yacht parties. I think the yacht parties there are incredible. But San Diego, you guys have a nightlife scene that reminds me of Austin.
Oh man,
it was very much like Austin, because you have like bars that you can bar hop and go from one spot to another, and you have people out in Gaslamp like just chilling like out on the street like Austin or Nashville. So it's like kind of a different vibe.
Dude, I love San Diego, man. We got bars, we got nightclubs. I live in a neighborhood called Little Italy, which is like a really cool neighborhood of downtown San Diego.
Yeah,
right on the water, close to everything. So the best restaurants are there. So go on a nice date, take a girl out to dinner. You got all the restaurant options right there. And then in terms of nightlife, we got all the nightlife there, all the clubs, everything. And then the after parties are great. So you get a good blend of both. So you get the good afters, and then there's a lot of house parties as well. Actually, Lisa Song connected us. And she's in Fast Lane Drive. I was at a mansion party with her that night out in Coronado. And she was like, hey, I'm going to connect you with Michael. But that's just an example. We were on a big yacht that night earlier. So you got it all out there in San Diego, man. It's awesome. And, as you continue to grow and build the brand, opportunities and doors start opening for you, and you start getting into rooms that you never thought were possible. And that's what I'm realizing right now, which is cool.
For those you don't know, Lisa Song Sutton, she's former Miss Nevada. She's an attorney, super successful. She was part of the when I interviewed Robert Kiyosaki. She was here with us. She's friends with Robert Kiyosaki. So
shout out Lisa, man. We love her.
Yeah, she's terrific. That's the other thing. So I took a girl on a date in San Diego one time. We went to Seal Beach. And then I took her to go see the F-18s take off over at I forgot what the North Island is. That what it's called?
North Island.
North Island. And then I took her to a Nimitz class aircraft carrier to hang out there. And she was like, because I still have access. I'm a retired military officer, so I still go on base. That's awesome. Like the places they got there. It's funny how beautiful that place is. I was in Temecula the other day, and I was like, I see why we fought for this land. Like this is, I see why we beat off Mexico for this spot. This is a beautiful, beautiful place, man. All right, so you have that whole situation. I love that whole workaround because that has been a big issue. And I'll tell you right now, that's kind of like the influencer thing that they're doing. Influencers now, they'll make money from Facebook ads AdSense or their OnlyFans or whatever. And the first thing they're advised to do is to get into real estate. And they're buying these single family homes, and then they're always trying to Airbnb them, always. You know, I have a ton of, at least 20 girls I know right now that are probably watching this, that they do this. But the idea of a boutique hotel, because it's zoned commercial, I can do whatever. I can have look, we're having a fucking furry party at 3 o'clock in the morning. Ain't nothing you can do to stop us. You know what I'm saying? So that's genius that you came out with that idea. Can you talk about this? There's one of my favorite things. You obviously had Grant Cardone on there, and I loved it. Grant Cardone is so compelling to listen to. Very controversial, and obviously he's friends with my buddy Bradley.
Okay.
And
Brad.
one of the things he said, he had one of the most backhanded insults I've ever heard on your show. Do you remember when he's talking about Dave Ramsey? He goes,
"Oh yeah."
He goes, "Dave's good if you want to stay in the middle class." I was like, "Damn, bro, damn."
He said, if you want to stay in the middle class, pay your debt off.
Yeah.
If you want to go to the top, learn to use debt.
Yes. So Robert Kiyosaki was explaining this concept to me. I hear Grant Cardone explaining this concept to me. You talked about having partners who may not have been maybe more risk averse than you. Can you talk about how you use debt in order to make money in real estate?
Yeah, I mean, you got to use debt in order to grow. And so, perfect example is I bought many deals in real estate to where the bank financed 100% of the whole purchase price and the renovation. And I literally can get into some of these deals with none of my own money. And then I can add value, and then it produces cash flow above and beyond whatever the debt payment would be. And that's, basically how we do it.
So
positive arbitrage.
Have you ever read what's it called? 50 Cent's book, Hustle Harder. Have you ever read that book?
No.
Highly recommend it. It's terrific book. Way better than what I thought it was going to be. Because he's a billionaire from the vitamin water and stuff. But one of the things he talked about is like, when I was broke and I tried to get a loan, nobody was going to give me shit. He talks about this example. It's like, I got a loan for $1 million. I put $1 million in my bank account, and I went to another bank and showed them I had $1 million in my bank account. They gave me $3 million. Is it like that? Is there like a point at which you are able to acquire these assets, and then once the bank sees you as like a reliable person to lend to, it just shoots up to now you have $10-20 million dollar line of credit? A lot of my audience might not be familiar. What is that like?
So it's two things. It's net worth, and then it's track record.
Okay.
So to get these real estate loans, they want to see some sort of track record with positive operating history. So the more deals you do successfully, the larger your scheduled real estate own gets, the easier it is to get the lending. The second thing they want to see is net worth requirement. So typically they want to see a net worth equal to or greater than the loan amount.
Okay.
Now, if you don't have it, it doesn't mean you can't get the loan. You just got to go partner with someone that has the net worth.
Okay.
Right? And so if you have those two things, the experience and you have the net worth, you'll be able to get these loans to go buy the real estate stuff. The last deal I just bought, this is a smaller deal I do on my own. So I'll do larger deals with partners. We'll raise money from investors. I got a fund. But a lot of the smaller deals, I'll do on my own, right? So whenever I can do a small deal without investors, I always try to do that. So I just picked up a deal last month, downtown San Diego, 3-bedroom, 2-bath, historic building in downtown Little Italy neighborhood. It's like 2 blocks from all the bars and restaurants, trendiest neighborhood in San Diego. But the cool thing is it's all high rises down there. So it's all condos, 1-bedroom, 2-bedroom condos. But this, we actually own the land. So picked it up for 1.4. The bank financed about 1.1.5. And so the down payment was about $250. The seller financed $200,000 carried back. So I did pick up this property for $50,000, and the lender is going to finance all the construction and the renovation. When I'm done, this property will be worth $2 million, and I'm going to pick it all up for about $50,000 out of pocket.
How long is the note, and what's the interest rate on the note?
Yeah, so this one is a 18-month note.
Okay.
And it's hard money, which is not cheap right now. It's about 11%.
11%. So you got to pay this off in 18 months.
Yes.
Okay. They require collateral from other property. Do you use your other properties as collateral to do the next loan? Is that how it works?
With the seller carrying the $200K back in a promissory note, she wanted to cross-collateralize another property that I had in second position, and I was okay with it.
All right. So I'm going to talk about the big one that you talked about with Brad Lee that got my attention was the idea that you have a fund. So, Ryan Pineda's done a fund. Obviously, Grant Cardone infamously has a huge fund when it comes to real estate. I come from traditional listed equity, so I'm used to REITs. I use REITs if I ever want to trade real estate, just because I don't shake hands and I don't know anything about closing costs, and I've only bought like 2 houses in my life, so I'm not really as familiar with it. I'm trying to get more familiar with it. But with your place, with your fund, you promised 20% returns, and Brad asked accurately, well, what's the downside? Obviously, there's getting if I give you $1 million, you guarantee me $200,000 back every year. What's the catch?
Yeah. So with the fund, we're not doing the 20%, but with this particular deal that I discussed with Brad, that was on a 10-unit boutique hotel up in Northern California.
Oh, it was a specific deal.
It was a specific deal just for that one deal. And so typically when you go raise money from investors, you're going to give them some sort of equity, right?
Got it.
But with this particular property, we bought it so cheap. We bought it for 1.5 from a seller. And we knew that we were going to triple the value of the property in about 12 months. So bought it for 1.5 in August of last year. It just appraised for 4.5. And so we actually are in the process right now of paying all the investors back. We've been paying them 20% of their money the entire 13 months that we've had the deal. And we just cashed out the refi in Friday of last week, and the investors should have their money here in the next 2 days.
So hypothetically, if something had gone bad, like the market crashed or whatever, we get invaded by China, whatever, something like that happens, you could switch that promise of 20% to equity. Is that what you would have done?
I would have gone to the investors, because a lot of these investors have done multiple deals with me.
Got it.
I know I have good relationships with all of them, but had we got into a black swan event, I would go to them and work something out and probably convert a lot of them over to equity.
It's good to hear you say that, because that's why a lot of people are afraid to get into real estate, is because they're afraid of situations like that.
And things are always going to go. You're always going to have problems. I mean, none of these deals I've ever done go according to plan.
Yeah.
But when push comes to shove, like, we always figure it out. That's what we do as entrepreneurs, right? And so, the more deals I get into and the more mistakes I make and get out of these mistakes, the more confidence I get moving forward.
So you brought up another interesting point, people who've done multiple deals with you, and you probably don't have to be on the phone with them every day, because they understand, they give you a longer leash, they give you more leeway. One of the issues I have in the coaching space is that if a guy comes and he does 20K paid in full, I never have problems from this guy. He follows all my directions because he's super invested in the program. When I have a guy who comes in for my free program and he's haggling with my sales guy on my cheapest product, I just know I'm going to have to deal with shit with this dude. Yeah. Like, it's almost to the point where, like, why are we even, let's just get rid of, like, it's the same. I don't know if it was Grant Cardone or somebody was talking. He was like, I've got 40,000 people in my program. We keep hearing the same 10 names. Can we just fire them? Do you have the same issue where, like, your bigger investors, by the way, it's the same thing with models. The biggest, prettiest models with the biggest following always show up on time. They're super grateful. They know how to pose. They're hyper professional. They're never doing drugs. It's the girl with 4K followers who's asking you to pay for her hotel and her fucking her plane ride. She's just nothing but trouble.
Why do you think that is?
Because entitlement. Because one time, I'll tell you why. Because one time she fucked an outfielder for the Padres, and now she thinks that's how hot she is. That's why. And then from every standpoint, from that point forward, if you don't match up to that, then you aren't good enough. And so, like, I just cannot believe. So 3 of my closest friends, Kindly Myers, Caitlin Runk, and CJ Sparks. I'm really close to them. I'm also close with, like, Emily Sears, Lindsay Palis, and Chloe Teray. They're huge models. They're always professional. Whenever they come to a shoot or a party, they're always on time. They're like, it's incredible. I'll have some girl who's just, like, kind of busted, bro. She's kind of mid with, like, 4,000 followers, and she's literally asking me for a hotel room in Los Angeles. I'm like, why would we do this? Like, I'm just it's so crazy. And then here's what else is crazy. Sometimes we offer to pay kindly to come to, like, some of our events. We'll, like, pay for our airfare because she's a huge follower and she's a huge following, and she raises money for our charity events. And she says, no, I'm not going to do it. You don't have to pay me. It's so crazy how this, like, abundance mindset with people who are successful are just so much better. 100%. It's so much better. I learned so much more going out with Dan Fleischman, and I'm sitting there to Eric Spofford and Wes Watson, who are just like, nobody's concerned about petty shit. These guys are so fucking successful. There's no pettiness. There's nothing that slows them down. And it's so interesting when you see people that abundance mindset, they're easier to deal with and they're richer. It's just, and then the same thing with models. They're easier to deal with and they're hotter. It's just so crazy how this one area of the world, it's like, and that's one thing that I found is, like, when some of my guy friends have become photographers, some of my clients have become photographers, and I'm like, if you keep aiming higher, you'll notice it's way easier. Yeah. When you start aiming lower and you try to do, that's why what was it? Grant Cardone was talking about the single family homes, and he wants the multi units because when you deal with that type of situation, there's just, like, less drama. Can you talk about that? Do you have a similar instance?
No, 100%. So raising money from investors, it's exactly like that. My larger check investors that are floating $300,000, $400,000 checks without asking any questions, they're so easy. I just text them the opportunity. They're like, hey, count me in for $350. They wire the money in right away. There's no questions asked along the way, and we do monthly reporting. but they're just so chill. Never hear from them, right? Because they're used to writing these big checks and they got so much other big shit going on. They're not worried about floating that money. Now, it's the $25,000 investor, the $50,000 investor that's never invested before. Those are the ones that have a million questions. They want to do an audit. They want to go drive by the property. They want to do their own due diligence. And quite frankly, it's like, no, like our investors invest with us because they know they don't have to understand all the ins and outs of the real estate. Right? They invest with us because they trust us. Yeah. And so if you're going to trust us, great. But if not, and you're going to ask a million questions, you want to do all these audits, it's like, I just tell them, hey, I'm sorry, but we're not going to be a fit. Let me point you in the right direction with some other operators that might be willing to take your money.
Yeah, that's definitely the way to do it. For us, what we're trying to do is start a low ticket offer. So for the guys who like, by the way, Ryan Pineda is doing the same thing. He's doing an offer for, he has a 10K and he's going to in 3K. Like our low ticket offer is going to be $47 a month. Like that, we have a low ticket.
I got to figure that out too. So we have a mastermind that we just launched in March in the boutique hotel space, because all these short-term rental investors, the next natural progression for them is to get into boutique hotels. No one's educating on boutique hotels. So I'm like, guys, I told the team, this is in March. I'm like, guys, we got to roll this out now before we have competition. So we rolled it out. So we have a 50K offer, but we don't have a lower offer. Okay. And so I need to figure out a lower offer. We just picked up hotelinvesting.com. Yeah. It was just sitting out there. We picked it up for $2,700. So between now and the end of the year, we need to set up this website. I want to do like a free ebook, all this content, drive traffic there. And then I need to figure out a lower ticket offer, not the 50K.
So it could be a free offer. Like what you could do is just have a Discord server, a school server, or a circle server where everybody comes in there and you just have a community of people in there. And then you offer them like a little bit of community feedback and accountability. You could do that. And then and then what happens is your setters and closers just upsell to those guys. I like that. That's way better. But the problem is, and again, it's like no issue, but like people who are born in Indonesia, Nigeria or Brazil, a lot of times they can't afford your 50K offer, but man, they love your content. So they're getting on calls with your closers and just wasting their time. And this is not a part-time thing, bro. This is a huge problem for me and my company right now, is that like these guys who just like want to be my buddy and they're sitting there like talking my guy's ear off and then like, okay, well, I'm going to buy your program. And then they don't buy anything. They just want a friend. It's so crazy that it just happens like this. But yeah, that's definitely been an issue for us. But like when you create that low ticket offer, now I have the low ticket offer is not to make money. The low ticket offer is to get rid of the riffraff so that you only have these guys to upsell to who are your zealots. Does that make sense?
Yeah, that does make sense.
That's the best way. And the other thing is, this is what I learned from Andrew Tate, War Room, Justin Waller, and those guys. Is the concept of they would have a low ticket offer where they teach the guys to make enough money so that they could buy a War Room. So Hustle University would get it to the point where they had enough money to pay $8,000 a year for War Room. And that's a genius way to do it. So if you had a free offer where it was just like wholesaling, because this was the next question I was going to ask you, if I had to start from zero money, I'm sure you get this question all the time, but if I had to start from zero money, you mentioned starting like a wholesaling business or something to that effect where you don't have to put your own money in it. So you having a low ticket offer that does that so that they have enough money to drop 50K on you, that's what I would do with a low ticket offer. Yeah. I would solve one problem, thus illuminating 6 more, but making them enough money to where they can buy your high ticket offer.
Yeah. And here's the part I think about. It's like, how do I create the low ticket offer without taking away clients from the high ticket offer that would have bought the high ticket to begin with?
So the thing about that is just keep growing the pie and it just works out. Like I've just never had that issue. Like if people are of means and like you, they just want to give you money. It's not difficult. It's just, and the other thing is, you notice we're not really competing with each other. I rarely see people like, well, I bought a Dave Ramsey course, so I'm not going to do this. No, they buy all of them. Like
they do. I had one girl recently. She was like, hey, I'm in Grant Cardone's mastermind. Yes. I'm in Cody Sanchez, and I'm in another one. She's like, yeah, I don't know if I'm going to do yours, but let's do it. She jumped on one call and never saw her again.
Yeah, it's crazy. That part's nuts. That's why my program's called Men of Action, because we keep them accountable. Yeah. If they don't show up for the calls,
we encourage participation.
Ooh, we get on their ass if they don't. We get on Instagram like, where are you, bro? Yeah. One of the things my sales guys do is if they don't participate, like my birthday was like last week and it was like me and 50 girls. We'll send them videos like, hey, it's just a video with one of my sales guys with 50 girls. And like, hey, bro, how you doing? And like, it's just so petty, like what we're doing. And the guys are like, oh, what's going on, man? Yeah, man, I'm going to be on the call this week. It just like changes because you have to do that. Because when the mastermind, a lot of people think they're paying for like a video course. They're not. They're paying for accountability. Pineda said it best. They're paying for accountability, feedback, and community. That's what they're paying for. And so that's what the accountability especially. So that's the main thing. So let's go back to what I was saying before. You were going to start from zero right now. There's a lot of kids, maybe they're 18, 19 years old. They want to get into this space. What should they be reading to educate themselves? I recommend, this is the first thing I tell anybody. I'm like, if you have a job right now where you're making less than an Uber driver, you need to quit your job. Like if you're making less than an Uber driver per hour, because at least as an Uber driver, if I'm doing Uber Eats, I can listen to audiobooks. I can catch up 60, 70 books, get like totally caught up on this, listen to all of the Rich Summers podcasts. I can get caught up on this content, and then I could go make moves because I have money from doing this job. But I know I have friends that have engineering jobs where they're working 12 hours a day, and if you do the math, you're making less money than an Uber driver, bro. Like, what are you doing? And so that's the whole thing that I tell them. Where would you start from the beginning? What would you do?
Yeah, so it depends. If this person does not have any money and they don't have income to show for it, then they got to go figure out how to get some active income, right? But if you have some active income and you don't have money, you can go out there and get some no money down loans, and I would take advantage of that first. So there's credit unions out there that will finance 100% of a primary residence mortgage, and you can also do an FHA, which is 3.5% down. I would start with that, and I would go pick something up where you can operate as a short-term rental, start getting a little cash flow, and then you can pivot out at that job and figure out how to make some other active income. Now, if you don't have the active income, you got to go figure out how to make it.
Sure.
There's a lot of different ways to do it. You mentioned Uber. For me, sales. Like I grew up doing sales. I sold cell phones. I sold cars. When I was in college, I sold cars. I was making, a couple $100,000 a year. So for me, I'm like, that's my baseline, right?
Yeah.
And so figure out a way to go sell, make some active income. There's a lot of different programs out there. There's a lot of ways to make money within real estate. You got short-term rentals, you got fix and flip, you got apartments. And so if you don't have the money, go figure out how to do it, educate yourself, get into these support groups, and go find the deals. If you can go find deals, you can wholesale, you can start flipping some money, and you don't have to buy these deals to make money, right? So you can go find good deals, and then you can literally wholesale them to another investor.
Wholesaling seems like magic. That shit seems like magic right there when I explain wholesaling.
You don't need a real estate license or anything. You just go find investors and figure out what these investors are looking for.
Yeah.
If you can go and find deals, you are an asset to investors. Someone like myself, you can go find these good deals, and you can basically lock it up, and then you can literally wholesale for a fee. You can sign that contract to another investor for a fee. The stuff that we're buying, if someone found a really good boutique hotel and the deal penciled, I mean, we would give them $100,000, maybe even $200,000 assignment fee if it had that much meat on the bone. And think about that. That's one deal. Yeah. How many people, how long do most people work to make $200,000 in a year? You know what I mean?
Yeah.
And so wholesaling is a good way. And then the more experience you get doing that, and the more deals that you find for other investors, the more opportunities that you are going to get. And then it starts snowballing from there. But so that's what I would do.
Yeah, wholesaling feels like affiliate marketing a little bit to me.
Because
the wholesalers out there grinding when you're like, I'm sitting in my office, you know what I'm saying? But I have the capital. The wholesaler's out there going out there to find the deal for me. He doesn't even need a license to do it. He just needs to be like active, you know? So that feels a little bit like affiliate marketing.
And then while you're doing that, I would start putting out content on social media.
Yes.
You don't have to be the expert yet because you're learning, but just start documenting your journey. Start documenting everything that you're doing. Hey, we're walking properties today.
Yeah.
We're wholesaling this project. We're talking about interest rates here. And just start documenting it, because that brand awareness and building that content is crazy. I didn't start putting out content until a year and a half ago, and it's changed my life.
One of the things Hormozi says that I love is that even though he's probably one of the best, marketers of our generation, as he says, this isn't the best way to do it. This is the way I did it. This is the way I made $100 million. And so if somebody's out there and you're like, well, I'm not an expert in this, I'm not sure if I should be making content, but you did flip that $1 million home though, right? You did that, right? Did you film everything? Do you have the documentation to prove it? Make content on that. It actually gives you more credibility because you don't really know all this stuff. You were not that experienced and you still flipped that home. That's incredible. You should show that. This is not, so just think in your mind, this is not the best way to do it. This is how I did it and I was successful. That gives you credibility right there. That's the best way to do it.
It is. I was doing real estate investing for a little bit before I started doing the content, and the content really, it just makes a lot of things a lot easier. The opportunities, being able to connect with folks like yourself, like Grant Cardone, dating. I mean, it literally opens up so many doors and possibilities. Getting into parties, like it's crazy to think about.
Yeah, isn't that weird?
There's so many girls now, man, that 3-4 years ago, they wouldn't give me the fucking time of day. They would not give me the fucking time of day.
It's so true, bro.
And now all of a sudden, these girls are sliding into my DMs. Hey, they want to hang out now all of a sudden. It's fucking crazy. And the only thing that changed was the content and building the personal brand.
I'm not gonna say she is, but there's no lie. A girl had me kicked out of a table several years ago because like I was walking around VIP or had me kicked out of it and asked to come on my podcast years later. I'm not even kidding,
I love
bro.
that.
It's so true what you're saying, bro. It's definitely a big thing. So you start from the beginning, like you said before. You're going to try to get some active income and do that whole thing. Let me ask you something. Where did you learn these concepts from? Who was the original people? You've shouted them out before. The original people who taught you what was possible.
Yeah. So Robert Kiyosaki, I always suggest reading that book, Rich Dad Poor Dad. He's got another one called Cash Flow Quadrant. Changed my life. It's just assets, liabilities, gets you in the right mindset. And then, if you want to learn real estate investing, there's a lot of good books out there. One of my favorites is Multifamily Millions by David Lindahl. Very good book. Teaches you all the basics and fundamentals of buying a commercial property, buying like a small apartment building and fixing it up, making it nice and increasing the value of those properties. And, I think there's a whole other ball game out there for the folks that, grew up like myself, middle class, go to school, get good grades, go to college, get a job. That was my mentality. I didn't realize that real estate investing and entrepreneurship was even an option until my young 30s. And it wasn't until I was like 33 to where I cashed out my 401k and made the switch. But, for the folks out there, man, there's a whole other ball game out there. And, it's cool to pay it back now.
Okay, I hear this question all the time, which is, what do I do if I start from zero? I've never heard this question, which is, let's just say a guy owns his own house, okay? He's a cardiologist or an attorney or something, and let's just say he has 300, 400, 500 just liquid in the bank, or he's got it maybe in equities or something like that. Where should he start? If he's already doing okay, like it's not life or death, where should a guy who's doing okay, maybe has $500,000 in the bank, where should he
And he's
start?
a doctor.
Yeah, he's a doctor,
attorney.
lawyer. So like basically he has a job where he can't go out there grinding and wholesaling and all this kind of stuff. Where should someone like in his position start?
Yeah. So
Well, how about Brad? Well, Brad's obviously 10x that, but like someone like Brad who doesn't have the time to do it but has the money. Where should he start?
So those folks should not take the time to go learn real estate investing and to take the time to become an expert in it. They should continue making money in their prospective field because that's their highest and best use. And then take everything they're making and then they go invest it passively with, there's many good operators in the country that invest in different asset classes. You can invest passively into their funds, into their opportunities, and you get tax benefits and you get cash flow and passive income. And that's it. You mentioned doing the REITs. The REITs are cool too. The difference between like a REIT and investing in a fund is, with the REIT, you're gonna pay capital gains tax, but with the fund, you're actually a limited partner, and so all those tax benefits flow through to you as the limited partner, and so all the cash flow that you receive during the whole period as a limited partner or passive investor, you can expect not to pay income taxes on.
Okay, for any of you guys who come from like regular equities, you're talking about capital gains. So a REIT is essentially an equity that you can buy. So for instance, a publicly traded company that switched themselves to a REIT would be Caesar's Palace or Caesar's company switched over to a real estate trust. But even if I make X amount of capital gains, unless I hold it for more than a year, I'm going to have to pay short-term or long-term capital gains depending on what I'm doing, unless it's a commodity in which in case there's a 1256 like mismatch where you pay 60% long-term capital gains.
But there's a lot of pros about the REIT though, because it's more liquid, right?
It's more liquid, and I'm not involved with closing costs and all this other kind of stuff. But yes,
probably less liability too.
Less liability. Now the only issue with the REIT is like some of these REITs are small enough because I trade options and there's not a liquid enough options market on some of these things to like take advantage of like short-term movement or something like that. But I do like that idea. Now let's go back to the fund. Can you explain this magical depreciation? So now I'm a multimillionaire and I buy a property and I can somehow write off this depreciation against all of my expenses and end up paying very little in taxes. Can you go over that whole thing?
Yeah. So let's just say that we buy a commercial building. We put 25% down on this property.
Okay.
We can get what's called a cost segregation study on this property, which basically is just an analysis and it's a way to supercharge the depreciation of the property. So all the components of the property, whether it's the roof, the AC units, the kitchen, the HVAC, all that stuff, we can depreciate on a schedule. And we can it's basically think of it as a phantom loss, right? And so you're going to make cash flow all year. You're going to put 25% down on this property and you're going to depreciate. This year you can depreciate up to 80% of the entire basically cost of the property.
So wait a second. So even though I have 25% equity in this property, I still can write off 80% of the depreciation.
80% of the depreciation that flows through the cost segregation study. Now, what that basically can translate to in simple language is you put down 25%, you're going to get about 35% in depreciation in year one.
Okay.
Right. And so all that cash flow that you make in year one is you're not going to pay taxes on, and then you can roll over those losses from year to year, meaning while you hold that property, you're going to expect probably not to pay any taxes on the cash flow until you go to sell. And then when you refi these deals, we do a cash out refi when we improve the value. And that is also tax deferred, meaning you don't have to pay taxes on that money.
So now how does this work? Because from my understanding is now when I sell, I have to pay back that depreciation, or I can roll that over into another property. How does that work?
So when you sell, it will trigger all the depreciation. However, you can do what's called a 1031 exchange.
1031, that's what it was. Okay.
And the 1031 exchange allows you to roll that property, all those gains into the next deal. And by doing that, you kick the can down the road, and you can defer the taxes again and reset all your depreciation. It's a beautiful thing.
1031 wholesale. This seems like magic, doesn't it?
Yeah.
But then when you see this, and then like for instance, the concept of even like expense, like having expenses and going against your taxes, you see companies like Apple, and you're like, how is it that Apple doesn't pay any taxes? Well, number one, they do a lot of business in countries where they don't have federal income taxes. Mm-hmm. It's like Scotland, Ireland, whatever. And number two, they'll buy a company for $1 billion and then write off that off as an expense and any kind of depreciation, and their tax liability ends up being zero, and then they have $500 million in cash sitting on the side. Yep. That's how they do it. And what you need to, when you hear this, if this upsets you, what you need to think is, this is how wealthy people stay wealthy, is that they understand these concepts, and then this helps them, right?
They understand debt and taxes.
For debt and taxes. I come from a commodity space. We have this thing called the 1256 tax thing where, like I said before, 60% long-term capital gains. Even though I just got in and out of an options contract in a week, I'm still paying 60% long-term capital gains, which is a lower rate, like 20%. Even though normally somebody, if I take home $1 million, I'm gonna have to pay 40 or 50% of that in taxes, especially if I live in California. And now this is how rich people stay richer. That's essentially what goes on. Having more income, eventually, that doesn't help as much. Real estate is a great way to defer or avoid taxation in several cases, just like what you were saying before.
I mean, you got active income, you got passive income.
Yeah.
Passive income is not taxed. Active income is very taxed. So the wealthy understand how to make the active income, and then they flip the active income into passive investments, and that's how you do it.
Your favorite interviews that you've done?
Ooh, I would have to say up there is Grant Cardone.
Yeah.
I did Robert Martinez this morning in Houston. I was up there. He just foreclosed on a 232 unit apartment deal a couple weeks ago, $51 million loan. He raised $18 million from investors. That just went bye-bye.
So for the audience there, when you say he foreclosed, meaning that the lendee had defaulted on the loan and then he got it at auction? How does that work?
Yeah, so he bought a 230 unit Class A brand new apartment building in Houston in early 22, right before the interest rates went up. Mm-hmm. He bought it on floating rate debt, so adjustable rate mortgage, and the interest rates basically tripled, right? Mm-hmm. And so his debt service went up so much that he basically was just bleeding cash. And he told me a lot of the units were Airbnb investors, actually, about 30% of the units. And so all those folks kept moving out, and their occupancy dipped. The property was bleeding cash flow. He tried to work out a deal with the lender. The lender wouldn't work out with him, and they foreclosed on the property. So they're taking the deal back. So basically the $18 million that he raised for that deal, that's going bye-bye. And then the lender's going to take that property back, and they're going to auction it off to another buyer.
Okay. And then got it. It's incredible. All right, that makes sense.
But here's the thing. The dude did 15 successful apartment deals and then one bad one.
Yeah.
And unfortunately, the one bad one is what's going to hit the news.
Yeah.
So, but dude, yeah, it's crazy. I know you do dating on this podcast, man. Man. Check out.
I'll tell you what. So we're gonna do. We're gonna end this. It's gonna be a shorter episode for me, and then we're gonna switch it. We're gonna do his podcast, and you can ask me whatever questions you want about that kind of stuff.
Yeah.
But yeah, for sure. That's man. That's just fascinating to me. Yeah. This whole world has just been open to me recently, because my company's doing really well. Let me ask you a question about an LLC getting into real estate. So one of the things we're thinking about doing is, as a company, because we have so many live-in clients that live with us, is actually buying apartment units in high-rises and actually filling them full of our clients, and then just paying off the mortgage that way over time, house hacking, for lack of a better term. Do you recommend that, ever having your company buy property?
I do. I think house hacking is one of the best ways for like the everyday person
I'm doing it right now. My guest rooms are all full of whenever I have guest rooms, they're always with clients.
Yeah. I had one of your boys, Spencer, on my podcast, and I think he's out here in Vegas, does the same thing.
Yeah.
But I think that's the easiest way. House hacking is the easiest way for the everyday person to become a millionaire.
Yeah.
Go out there, buy a house for 3.5% down, 0% down, 5-bedroom house. Go rent out the 4 other bedrooms. You live in one. And that's it.
Just get some fucking college students, man.
Yeah.
You know what I'm saying? That'll get in there and just like, or in my case, because I teach a lifestyle product, I have a bunch of dudes who are all like-minded, and it reminds me of when I lived in the barracks. It reminds me of when I lived in the trailers when I was overseas, and I like it. My girlfriend does not like it very much, but I love having dudes there to like watch the cats and shit. You know what I'm saying? Like to be there or to go play basketball with or whatever. So I think house hacking is great.
Well, think about this. You buy $1 million property. Let's say it's a 6-bedroom. 0 money down at a local credit union.
Yeah.
You live in one room, you rent out all the other rooms, right? They pay your mortgage.
Yeah.
In 15 years, that $1 million property is going to be worth $2 million.
Yeah.
And you could have that mortgage paid off in 20, 30 years, and now you have a $2 million net worth, and you don't have to do anything.
Yeah.
It's boring.
Yeah.
It's not sexy, but that is almost a guaranteed way to make a couple $1 million.
Yeah, that's what I was thinking. I was going to buy one unit and then have the company buy another unit, and then actually build a podcast studio, a separate one, just for like a smaller one in the unit. That's another thing I've seen people doing. It's really working out well for them.
Yeah,
and then
I like that.
And then expense everything.
Everything.
I'm a content creator in my own home. Everything you can write off. It's incredible. Like when you get to know your accountant really well.
No, I love that. And then take a step further. You can refi that property every 4 or 5 years.
Yeah.
Like an ATM machine. It's tax deferred. Use that to go put it down on more real estate. And then now you're playing Monopoly.
Beautiful. Incredible. Hey, man, I appreciate this. We'll do a longer one next time. I do appreciate that. All right, here's what we're going to do. We're going to flip this, and then he's going to have me on his podcast. And we really appreciate you coming on this, man. We made it to 100 episodes. Thank you guys staying with us so much. The company is growing. Those of you who are interested, we are still looking for setters and closers and other people to join Men of Action. It's gotten to the point where we're at the breaking point. We have too many leads. We have too many people coming through the door. If you love this content, if you love my program or whatever, and you want to join us, hit me up on Instagram and I'll set you up, or you can just go to moamentoring.com/jobs and join us. And eventually at some point, man, we're going to do some kind of mastermind like this, and I'm going to talk about real estate. So I appreciate you coming on here and helping us out with that. I will see all the rest of you guys next week.